Okay. All right. Hi. Good morning, Mark. Great chatting with you. Let me first start off by getting a sense as to what's it looking like in terms of FY27, in terms of earnings growth, because that all of the policy that has been made seems to be pointing towards growth both on top line as well as on earnings. When does that start to happen, in your opinion?
I think it will start to happen in the next quarter. It didn't happen in the current quarter because the GST cuts only really just happened in the last week of September, and so people were waiting for that. So I think we'll have to be patient, I'd say, throughout the impending quarterly results. But beyond that, I would expect an acceleration. And numerous anecdotes, I think, are already showing us we'll see that. So for fiscal year 27, which of course is the period beginning in March next year, we should look for around, we think, 16 to 18% earnings growth for the Nifty. And if we're right, then I think that makes a strong case for the market to go up next year.
Mark, what will be the sectors which are poised to benefit the most from the earnings upside that we will see? Because obviously we have seen some margin expansion which has reversed in FY26 already. So will that trend continue? Will the margin contraction to a certain extent continue, which will keep a lid on earnings in some sectors? Give us a sense on which are the sectors which will benefit the most.
I'm sorry, I actually don't have that many insights. I apologize. But I just say intuitively, with these big cuts in the GST and the income tax, you would think that the consumer stocks would benefit the most. I think that there's so many interesting things to look at in the Indian market. I don't tend to be sector specific, but consumer is the one intuitively that you'd expect to benefit from the changes to the tax regime this year and benefit from the decline in interest rates.
Right. Mark, hi, morning.
If you like this video, then like, share and subscribe to ET Now.